Hiring a new team member is one of the biggest decisions an agency owner will make. Building a team is required for growth, but it's also very risky. Get it wrong, and it turns into a cash flow nightmare. As your agency grows, the question of when to hire becomes more and more crucial. My name is Rehan Moghul. I'm a chartered accountant, agency CFO, and the founder of Sidekick Accounting. I've helped hundreds of agencies make better decisions that unlock profit and cash flow using similar strategies to what I'm going to show you in this video. So when is the right time to hire your next team member? First thing to consider is that employees for an agency are the biggest cost that will go through your profit and loss. They're also the reason agencies are so sensitive to cash flow. You've got large fixed payments out to your team each month, but your income can be sporadic and unpredictable. Clients might delay payments, projects might dry up, but you still need to pay your team at the end of the month. Before you even think of hiring in your agency, you need to be clear on what the future holds. That means predicting the income that's going to come in, knowing what fixed costs you will end up spending, and having clarity over your numbers. This is called a forecast, and without one, it's a dangerous position to be in because you're flying blind. Now, forecasting isn't just a one-time task. Once a forecast is in place, it's a valuable tool that helps you make every decision in your business based on data rather than your gut feeling. To create a solid forecast for your agency, map out the next 12 months in terms of what you expect to receive and what you expect to spend. Once you have this foundation in place, you can start to build in different scenarios, look at what a worst case is, a best case is, and a likely case is for your business, so you completely understand the impact of the decisions you're going to make before you make them. Using your forecast to understand the future is how you take the most value from it. So let's start with the worst case. Ask yourself, what is the worst thing that can happen to my business over the next 12 months? That might be that you lose your 2 biggest clients. That might be that you hire 3 new team members and you win no new business. Or maybe it's even something personal that requires you to take more money out of the business than you expected. Define that worst case and put it into your forecast and ask yourself, can I still pay my team? Can I still pay myself? And is there a situation here where the business is no longer viable? That will give you a good starting point to understand how resilient the business is to certain changes that may or may not be in your control. Next, you should consider the best case. So what happens if you close all of your pipeline? Or you hire these team members and they pay for themselves within 3 months. How quickly will you grow? What else do you need to consider at that point? Will the existing team be able to support that level of revenue, or are you going to think about hiring again in 3 months? All of these questions can be answered with a forecast, and by having a best case, you're doing the thinking behind what happens when this business takes off, or when I hit certain revenue thresholds. So you're prepared well in advance for what needs to happen to take advantage of growth. Finally, if we look at the likely case scenario, that's blending your worst case and best case to say, what do I actually think will happen based on historic trends, based on my understanding of the market and my current pipeline. This is where you can balance optimism and caution to get a good idea of how the business looks with this new hire in place. Now, looking at the business through these 3 different lenses will give you a clear picture of what you can actually afford to do today. So we have our baseline forecast in place. We have a few different scenarios that help us understand worst case, best case, and the most likely case. This is a tool that should evolve over time, and you should be keeping up to date and reviewing regularly, so that when you have a question like, can I afford to hire this person? That just becomes another scenario that you can put into your forecast to build in the cost and expected uplift in revenue as a result of this hire that helps you make decisions based on data and not your gut feeling. Hiring your next team member is a huge step for your agency and one that can have a massive impact on your future financial position. Having a forecasting process like this in place, you can make informed decisions not just about hiring, but also pretty much anything else that comes up in the day-to-day running of your business, so that you're never making decisions without understanding the impact in the future. Remember, it's not about what you can afford today, it's about what you can sustain and continue to afford going forward. If you found this video useful, give it a like and subscribe to my channel for more agency finance content.